What's going on, brothers? The stock market, 2021, will it crash? Charts, data, analytics, we're going to be diving into all that today. What are some of the top entrepreneurs and investors saying? Micheal Burry warns of a 2021 stock market crash. Robert Kiyosaki, best-selling author of Rich Dad, Poor Dad, says there's going to be a biggest crash in history that's coming. Let's dive into all this information. Make sure to leave a like. Make sure to smash that thumbs up button. Sub to our YouTube channel. We just had a podcast that recently came out, so if you want to dive into that, check that out as well. I appreciate you stopping by, and let's dive into the information right now, brother. All right, brothers, so now let's dive into what these entrepreneurs have to say. Let's look at some charts from Yardani Research, the forward PE ratios, the price to earning ratio, so we can get an understanding of where the market levels currently are. And let's dive in again what Micheal Burry and Robert Kiyosaki has to say and why they have reputation or are knowledgeable in the stock market. So again, let's dive into what Micheal Burry. So Micheal Burry is an American investor, hedge fund manager, and he founded the hedge fund Scion Capital, which he ran from 2000 until 2008, which was when obviously there was the huge crash in 2008. And he shorted the housing market, and he's very well known for being able to tell when the crashes are occurring. So again, what did Micheal Burry say, and what is he saying about the crash? So big short investor Micheal Burry is warning of an impending market crash. Losses the size of countries are coming. Micheal Burry, the investor whose big bet against mortgage-backed securities prior to the Great Recession, which I said was in 2008, the Big Short, warned Thursday that mothers of all crashes are coming. And he also stated mainly that hedge fund manager Micheal Burry, famed for forecasting again the 2008 crisis, has warned that there's a big crash coming. And what he's saying is that all hype speculation is doing is drawing in retail before the mother of all crashes. When crypto falls from trillions or meme stocks fall from tens of billions, Main Street losses will approach the size of countries. And he said history ain't changed, and history is going to repeat itself. And he notices that the Fed and the government are printing all this massive amount of money, which is flooding into the markets, which is making these current stock market valuations at an overpriced valuation and making them into a bigger bubble. Now, guess what? The other entrepreneur that agrees with him is Robert Kiyosaki. Robert Kiyosaki, obviously, he's one of our favorite other entrepreneurs of Brotherhood Finance. Him and also Grant Cardone, who is also very influential in the real estate industry, is an American businessman and author. And Kiyosaki is the founder of Rich Global LLC and the Rich Dad Company, a private financial education company that provides personal finance and business education to people through books and videos. So what Robert Kiyosaki is also saying is he has predicted that the biggest crash in world history, and he expects Bitcoin to fall to the $24,000 price target. Now, if that was to occur, I would be accumulating more Bitcoin and more Satoshis at a lower price so I could accumulate more and get an increased return on investment when that asset price goes back up in price. Now, what he tweeted was the biggest bubble in world history is getting bigger, and the biggest crash in world history is coming. Buying more gold and silver, waiting for Bitcoin to drop to 24K. And again, crashes are the best time to get rich. Again, at Brotherhood Finance, we always speak that the best time to get rich is to buy when the crashes occur. So now let's dive into some charts. Let's dive into some data from Yardani Research, and let's look at what I think is going to happen. And let's look at some charts and some statistics so we can get a very good overall understanding of where the markets currently are at. Okay, brothers, so in this slideshow presentation, we're going to be looking at the forward PE ratios, like I said before. So the price to earning ratio. So if you look right here in large capitalization companies, it's at 22.2, which is real rich. It's a high valuation for the forward PE ratios. And then if you look at the small capitalization companies, it's a little rich but not out of control, and it's at 20.8. So that's not as bad as the large capitalization companies, which is one of the reasons why I'm investing in these smaller capitalization companies, because they have less risk and they're not as overpriced as the other higher priced assets. All right, brothers, so the median forward PE ratio is, currently it's around 20, and normally 13 to 18 is normal, but 20 or higher is pretty risky. And then if you look at marginal debt, if you notice at this chart right here, it shows, throughout history, obviously, each peak is usually followed by a huge dump. And if you look at 2021, our marginal debt yearly change in billions of dollars has been substantially increased. So we're, obviously people are borrowing more and more money to invest in assets. And obviously our government is printing more and more money, making us a larger debt nation. I think we're currently at around $28 trillion in debt. So we are just, at a massive amount of debt, and we're going to eventually have to pay that money through taxes. So again, obviously, like another chart right here, marginal debt is through the roof. And the amount of money that we're printing is outrageous. So if you look at S&P 600 small capitalizations, it's high, but it's not as crazy as a large capitalization stock. So that's why I've been investing in smaller cap companies like Planet 13 and other companies like that, like Dropbox as well. Again, like I said right here, 13 to 18 is a normal PE ratio. 20 is a little substantially high. So what do you do in this situation? How should you be investing your money? What are we doing at Brotherhood Finance LLC? So what we're doing is I'm holding about 40 to 50% cash on hand. And the reason I'm doing that is because when these stock markets do crash, like Robert Kiyosaki was saying, the best time to get rich is by buying the crashes. So that's what I'm doing. So yeah, brothers, that's what I would recommend. That's what I'm doing. This is not financial advice, but I like to provide a lot of value, and I hope you found a lot of value out of this video. If you have any comments, leave those down below. Again, make sure to follow us on Instagram and TikTok at Brotherhood Finance. I appreciate all the love and support. And if there's any videos or any questions you have about how you should prepare for this market crash, if you agree or if you disagree with what's occurring in the economy right now, make sure to leave that down below. I appreciate all the love and support. Take it easy, brothers. Peace.
Like these ways right here.